All right, hello everybody. So I'm Isaac. Today I'm going to take you through one of my trades. This one was from Wednesday, the 2nd of March. And basically like an intraday momentum play. The market had sort of developed a trend. I was just looking to play with it, going through the range. I'll sort of explain that a little bit more as we go. But yeah, this is in the S&P. Okay, so just the outline of this talk today. First, we're going to start off in with basically the trade idea. Second, like how did I access it? Then third, we'll just have a quick look at how the trade started. Then talk about trade management, and then a little bit of another look at the ladder about that, and then some key takeaways. So again, the trade was from Wednesday, the 2nd of March, 2022, and this was in the S&p500 E-mini futures. Okay, so I'm going to describe the trade here using cash profiles. These are cash handle profiles. Basically, just for sort of a quick note, that box that I've just done there in red is the same as this one down here. That was just to break it out because everything's a little bit scrunched. So I don't know how much really the rest of the structure has to do with it. I mean, obviously it does, right? We've had like this offer. You can see there are some quite poor highs on the offer. The market offered overnight, and that was on the start of the Ukraine war. Then you got this nice buying tail here and this rip back, so this big squeeze, and then you got another P profile here, sort of a completion of that squeeze, and there is a tiny little tail at the highs, two handles. All right, then we had the market go and try that high again, leaving a selling tail and a poor low, and then we had this B shape like this with a tail, so it's kind of like, here we have on this bit here a liquidation of the shorts, and here we have a liquidation of anyone who got long in that first liquidation play. So the market's now kind of balanced in between this P profile and this B profile. And so I was thinking, okay, what's this market got to do now to break out of this balance? And that was thinking about or in one way or another. I hadn't planned to trade within the balance because I thought it could be quite choppy, but then I also was well aware of, like, if the market gets given a reason for a direction, I don't necessarily have to wait till it's up here, to try and get involved. I can try and do that earlier on. So basically that was that was the way I came in and viewed the market, and then I tried to put all the intraday stuff in amongst that. And so when we get to the access is really where we'll start to understand what I was thinking. So on the side I've got 3 comments. So I suppose actually maybe going back to this area here, I feel like there's 2 kind of things at play. One, are the central banks still hawkish, or are they getting a bit more dovish? If they're dovish, you'd expect the market to go that way. If they're hawkish, you'd expect it to go that way. And then you've obviously got the Ukraine conflict. And now if it looks like there's going to be a resolution, which hopefully there is, then maybe the markets will start to trade higher because there's less risk. But if it goes the other way and we can't de-escalate, then the market's likely to trade lower because there's that risk there. So that was kind of the way I see it. So either way, there are 2 factors driving the market, or 2 themes that we need to keep on top of, and and just sort of a move either way could be the thing that tips the scale, and then you'll get a dominant theme. So anyway, we're really looking at this part here, but I'll explain a little bit more first. So this is the overnight high here that cash opened, pushed above it, auction lower. Somewhere near here we had Powell start to talk, which actually is probably here. And then the market ripped back also on Powell. I kind of didn't catch what he said that turned the market. There were quite a few people talking on the floor, and I didn't really follow what that was about. I think he was talking about the fact that one rate hike in the next meeting, and pretty much what was expected. So maybe the market took what was expected as kind of a bullish sign. One other reason it might have done that was yesterday, we had bonds rip higher, oil ripped higher, and yet if you go back to here, this offer on the S&P isn't really that ginormous. Like to do a move of a similar size, the market would have come somewhere down here. So anyway, so maybe this market didn't really want to go down, and sort of like what was expected was bullish. Anyway, so then the market came and it filled out this block in here. And so this is a 1 minute chart, by the way. All right, then we got the market bid back to the highs of this block, and in that sort of region, it was probably in all of this, we started getting this news. And I've just put some things up here, some headlines from Twitter. So the first one, Russian Foreign Minister Lavrov says there should be a set of weapons that can never be deployed in Ukraine, okay? Russian Foreign Minister is ready to discuss Zelensky's desire to receive security guarantees. Okay, it looks like now that the Russians are coming out and saying, well, okay, maybe we're going to be a little bit more flexible here. And they came out saying Russian Foreign Minister Moscow's aim is demilitarization of Ukraine, but Ukrainians must select their own leader. So they're actually looking quite like they're trying to be quite peaceful about this. It's kind of at odds with the aggression that they've shown, especially with the way they invaded and started this war. So yeah, it seemed to me like that was a bit of a de-escalation. And so then that was my entry, and the market was here at the highs of this block at the time, and I thought, all right, well, now this market should push out of that and start driving to the upside. So you can see here, this yellow line up here is the high of yesterday, so that's this. Now, after making this session here, the market had come and made another overnight high, higher up, and I thought actually now if it broke this high, this market could really accelerate. But anyway, so my entry was here, my exit I think is somewhere in here, and then I looked to get back in, which anyway, I tried a couple of things, must have got in here, got out somewhere down here, and then got back in here again. And so we're going to look at the price action in two places. One, here where I was getting in, and the second one is just in this bit here where I tried to add. Now that second time, or like tried to get back in again, and I'll sort of explain more as I go along, but it was quite an eventful trade. So let's just make this full screen. Okay, so you can see up here, this is the S&P 1 minute chart, and so you can see the markets bidding quite aggressively to the highs of that block. It's pretty much there now. It's kind of like around that sort of 56 region. So you can see like the market's quite thin. I mean, all of the markets are really thin actually. I mean, just the volatility in this environment has totally changed. And you can see oil there with just one lot, S&P, everything's kind of like low single digits. Even the bund there in the middle is also really thin. So anyway, you just got to keep that in mind with how you size, right? Because there's a lot more volatility. And so, all right, anyway, so this market's still up and it's kind of auctioning sort of at the top of this block and a little bit below. And so, this is looking quite good now. Now the news is obviously coming, or I've seen it. Now I've entered in here twice and I was really expecting to go inside and I didn't want to hang around, so I took one off. But in hindsight, I got it in such a great location. That was a shame. Now you can see the market's pushed through to new highs on the day. It's broken out of that block, and so then any positioning in that block you'd expect to be unwound now. And so you can see this market's got quite a strong bid, really pushing up to the highs, just to 67.5. That's really like going. And you can see also now, like with the volatility change, the market's so thin, it can go so far, so fast. Anyway, the other thing though, just thinking about like auction theory, right? If the market just pushes up to somewhere without auctioning, it's quite likely, or it can come back and re-auction that area. And that doesn't really mean that the market's necessarily weak. It's just that's kind of like the nature of how it works. If it goes and grinds up, or like blocks out, comes and blocks out, then it's probably less likely to come back. And if it does, that's a failure, or more likely to be a failure. But when the market just goes somewhere really fast, with quite low volume at price, then it can rotate back. So anyway, you can see this market's really choppy, and as I was saying, you've got to expect that chop, right? That's just the type of environment we're in. And you can see this market's come all the way back down to like right beside where I entered, which obviously never makes you feel good. But as I said, as I was describing, here you've just got to keep your nerves 56, as I said, was pretty much the top of that block. This was probably my chance to add again, kind of anywhere in here. So, you know, just keeping in mind that the thing I said about the auction. Okay, and then, you know, is this market going to start driving higher? And the bid's looking good. But it still can take some time. So, you know, that's the thing, like the auctions, they get really volatile, just become so, you know, it's like so rotational, but really wide rotations. And as you can see, you know, like just the clips going through are obviously a lot smaller. And I suppose they have to be a lot smaller because, you know, there isn't the liquidity on the bid or the offer, you know, in order to take a big, you know, like 200 lot clip or something like that. So anyway, you can see that the market's gone bid again. And now we're just looking to see if this market can extend more, which I'm definitely expecting. You know, it's gone back and it's tested kind of like the point where it broke out. It's held that. And now, you know, we're looking for another extension. Right, the market's at the highs, starting to push through them. And there you go, we can see an acceleration again, up to 70.5. All right, and now we can see some sort of like, right, we can see that the market's trying to bid, but it's almost gotten a little bit heavier on the offer. So the market came back down to 67s. We can see like the market trying to bid went up to 80s, then sort of back to the sort of 67s, got up to 67 3/4. I know it's 68 3/4, and it's trying to bid. But you can see now the offer's just a lot heavier, up to 69, 70, back to the highs. So the rotations are getting a lot tighter now. So there you go, through the highs, just sort of like ticking a couple of lots higher. There we go, pushing through again. So you can still see there's still buying, but you can tell that the price action is different from what we saw before. So now 74.5, that was a prior daily high. All right, and then, so that was yesterday's high actually. So then, all right, let's just keep watching the ladder. So up to 70s. Back down to sort of 68s, bidding up back to 70s. And again, we've still got that, oh no, here we go, up to 71. Right, and there's still a little bit of weight in this ladder, so there we go, up to 71s again. Down to 70, back up to 71. Right, back to the highs, a couple lots through the highs, up to 73. All right, and so what was happening there is I was really looking to get up just because, as I described before, you know, when the market first took off, we had that sort of like aggressive acceleration, and then, you know, and then it sort of auctioned back and forth over that, you know, if there's really wide rotations, really loose rotations, then it started to push higher and you started to see a little bit more inventory come on the offer. And there what I was thinking was like, okay, we're getting so near high. Sometimes near high, the market starts to, you know, everyone who's long starts to take profit below it, and you get that like heavier offer. And you can see here now, you know, the market's really struggling to bid. So here it's like, it was up to like trying to buy through 70.5, there you go, okay, got it, up to 71s. All right, we might have to just, I'll show you the rest of that on the chart. So you can see here, like this is where I got out, and you can see that after here, this market starts to like pull back a bit, and you could, so that was really just about like the transition of the price action. You know, it was just about like, okay, cool, I'm expecting to see some, like I've seen some inventory, you know, some more sellers put the inventory, more trades put the inventory on the offer, and I was thinking, okay, cool, this market's done a decent move now, and I'm gonna get back out. And what I was thinking here actually is that like, okay, you know, here's my move. I think somewhere probably around the halfway point of that move is where this market should pull back to, and this bit here gave me the offer and the opportunity, sorry. And I thought, okay, cool, if I can get something like that, I can then use that to get me long again. And I mean, I really could have held the trade the whole time. And I thought, okay, I want to lock something in. This was like one of my first trades in the day. And I thought, okay, if there's a way that I can get back in with really small risk, I can either take the rest of the move if it's going to go. If not, then that's fine. I'll take a smaller loser, but I at least got to bank this main first move that I took. I'm not sure whether that logic's ideally the best, but anyway, it's what I chose to do. And so now we're just going to go to the next part. So we're going to watch the market come back through that midpoint, and I think that's somewhere sort of like maybe around like 66. So anyway, it has pushed through that high, but I thought on the news, as I was saying before, like that was one of the things that I thought that could get this market to move out of the balance. And so even though we'd sort of gone through the high, I didn't take that as a false break. I just took that as kind of like a swing high on the day, expecting that we would then, pull back, make a low, and then have another go. So I think I actually marked out the point here, so 65.5 must have been the halfway, and then that was kind of my point to look in. Now there was a bar that came up the top, and so this is where watching this video is going to get tricky, because you can't actually see my entry anymore. So what happened here is that okay, sorry, all right, that was no good, that part. We'll just go back and I'll show you sorry, I thought I caught it. But anyway, what happened to me is that TT went down. Anyway, the market offered down through there, and there was all this inventory on the offer, as I was describing before. I was thinking, okay, I need to find a way to get on this trade, and I was thinking, all right, so then we had this flush, and this flush took that point that I was talking about, and then the market then went offered, and it just went offered so easily, and it just started bidding really cleanly. And then I thought, okay, I need to get on this. And basically the way I got on this trade was that I missed the point I wanted, so yeah, the market just started bidding. I thought, well, okay, this market, sort of the counter rotation, if it's bidding really strong, shouldn't be more than like 12 ticks. That's what I think of the market as like a standard. So then I just bought, and then just said, all right, I don't want it to come back more than 3 handles, put my stop there, and kind of went with it. So I must have bought somewhere in here. Now, what happened with my TT is that I got into the trade, and then suddenly my fills stopped showing up. And then I was in this trade, I couldn't see where I got in, it wasn't showing on the ladder. Then I had to message a risk manager, and thankfully he was awesome. I asked him to put a stop in for me, but then I couldn't see the stop either. And so I wasn't at first sure if it was there, and then the market sort of like comes back towards your price, and you think, oh man, I actually don't know what to do here, because if I'm wrong and that stop's not there, then I'm going to lose potentially a lot of money. So that was quite a scary moment. Anyway, so now we're going to go and look at the price action up here, but I'll quickly skip to the next slide. And so what happened is, obviously this is an overnight high, so this is an overnight session here, this is cash, and this one here is cash as well. So this is that first high that we saw that I talked about being taken before, but then this cash high, if I bring it along, is just up here, so it's where this stopped. Now, when the market was pretty much up here, this piece of news came here, Russian negotiators say ceasefire will be discussed at talks with the Ukrainian delegation. So I think myself and everybody else thought, oh wow, this is massive. If they're willing to talk about this already, like this is great, this conflict might end. And then also the stock market should probably go up. So then, yeah, we expected a bid. Now, we might just watch the price action to show you again, but as I was saying before, we had this overnight high, and I thought because that had already broken this high that maybe the market would just be able to kind of like break and go, especially on this news, but it turns out I was wrong. So okay, so the market here's that high from the day before, and now the market's starting to bid, and so you can see, all right, already there, you can see some news has come out, like it's sort of like personalities changed, like that bid was just really aggressive, pushing to new highs. You can see that now actually that stop order's shown that I have one offer, but you can't see that I'm in a position, so this is part of the scariness of this. And so this market's just driven up here. And so we saw this really aggressive bid, right? And I'm looking to see if this bid can continue. All right, so we got to 83 and 3/4. All right, so the market's trying to bid, and you can see like the rotations here. It was kind of like each time like pushing up. All right, there you go, up to 82s, 82 and a quarter, 82 and 3/4. But as it bids up, you know, this market just, more volumes come in. There was like 100 lot up there, 83s. The market just ran up to test it. And then back up to 83s. Back up towards the highs, flick through the highs. And flick through them again, just 3 lots into the highs at 84 and a quarter. All right, so we can see that the market's come all the way back down now towards 80s. Bit up to 82s, back down to 80s. Bit up to 81, oh no, 82s, 82 and a half, 83s. It's trying, getting up towards the highs, up towards 84, through the highs, 42 lots into 85, into 85 and 3/4, 85 again, back down to 84s, up to 85. So the price action's changed again. So it is still going to the highs, but there's definitely, you know, a lot more inventory coming onto the offer again. You know, it's not that like super aggressive, just kind of like running away bid that you had right at the very start. All right, so the market's back down to 84s-ish, up to 85s, down to 80, into the 83s, down to 83.00, down to 82 and a half, trying to bid, but not really getting anywhere, sort of getting back into the mid 83s, back down into the 82s, back into the 83s, up into the 84s. But you can see, so there's like a lot more rotations, but at the start when it went, it was like this, and then it's sort of turned to price action that's more like, kind of like this, and it's not nowhere near as clean. So it's just like, it's almost kind of like cross currents are in the market now. You know, you've got people still obviously buying, you know, you've got all this buying flow coming in, yet from time to time this offer's going thick and you've got all this inventory now, so the market's got to chew through all of this before it can bid. And we saw a couple of times where it went to make new highs, but you can just see there's this weight on this market. So you can see now we're back down to 80s. Then we tested just below 80s. So that was one of the prices that the rotations were holding earlier. Now here we go back up to sort of 83s. Can it go any higher? Back down to 81s. Trying to be bought to 82s. Back down into the 81s, up to the 82s. Back down to the 81s, up to the 82s again. So you can see there's quite small rotations, still trying to see who wins in this auction, down into the 80s. Trying to bid, now back into the 81s, up into 82s, offered down through 80s into 79s. So you can kind of see here, just as we look at kind of like what handle the market's moving between, you can see that slowly the sellers are starting to take control of this auction. You go back up to 80s, now down to 78s, 79s, back into 78s, down into 77s, down to 76. And so you can tell just now the personality of this auction has changed. So you can see there's actually quite a similar like personality shift in the auction to the first time when we watched my ladders. Now, the first time when I noticed it, I managed to get out right by the high. This time I kind of thought, all right, we went, and because of that structure I was talking about, I thought, okay, we take this high here, you know, the next high that's unresolved is an overnight high, and I thought, okay, this market should just go and take it out. But I was obviously being a little bit too ambitious there. But that price action came in, like my idea was wrong, but had I just looked at the price action, it showed me exactly what it showed me before, and I could have done the same thing. I probably could have got out very close to the top of that market just using the exact same logic as I used before. And so that really just shows you how important it is to understand the price action. Just remember that that's telling you the truth. So, okay, you can see now it's back into that range from the day before. All right, so we'll go back to the slides again. Alrighty. Now, takeaways. So it's really important to be dialed into the sort of interaction between the structure and price, and that's even when you're trading comments. So what I'm talking about here is that, that first time when that first comment came out where I got in, this market was breaking out of a block, and I thought, okay, this should be a really clean bid, and that's what I got. Understanding that that's an area where this market should bid quite cleanly from was allowing me to put that trade on where I did, and sort of being comfortable sort of as the market came back, and sort of understanding, what I expected. Now, and then the same thing goes later on, as the market gets extended and moves into highs, understanding when, people might want to start taking profit and where inventory might come in. And then I was able to get out and then look at buying in on a pullback, and being able to kind of like play the market a little bit. Now, if you're trading price action, you obviously, this is sort of a note about like what I did well on my first trade and what I didn't do so well on the second trade. So, if you're trading price action, you get in when the price action is good, but you've got to remember to get out when it stops being good, right? When you don't do that, you're really trading hope. Oh, it was really good when I got in, now it's gotten bad, but hopefully someone else steps in. Hope isn't a trading plan, right? And so the first time, I did a great job of that. The second time, no, I didn't. So in the markets, just talking about like the price action specifically that we were seeing, when the markets get too long, you can get cross currents where the market's still bullish, right? We're still getting tradings buy, but then other traders are in taking profit, or some people might, anything can really be going on there. And so then you need to be just aware of this and then learn when the price action when it changes, or learn what price action looks like when the markets move, where they get too long or where they get to structure where people start to take profit, so like resistance points. And then recognizing this price action quickly helps you make decisions when the price is in your favor, not when it is retraced. So the first time, I was on side, I'm not really sure, maybe a bit over 10 handles or something. I'm not sure, let's say it's there, anyway, it doesn't matter. And I noticed the price action change and I got out at the top of the roof. The second time, I got in again at quite a good price, yet and on good price action, and yet the market goes to the highs, the price action goes poor. I didn't make the decision up there. Then the market starts to come back and I'm giving away most of the move, and then it comes back even further. I'm like, oh man, there's so much selling here. The market tries to bid, sold into a gain, and now I'm trying to manage this trade and decide what I would do with it when I've given back 3/4 of the trade. I'm going, well, do I just want to take a little bit here, or do I want to still stick with my original idea? And at that point, you're really on the back foot. You're choosing between kind of like hope and a tiny profit, whereas at the top, you're going, well, all right, I can recognize this price action's changing. And one of the best things is when you have more size on than one lot, then that decision's a whole lot easier. Maybe like, cool, I'll take off like 2/3 of my position and leave a little runner or something like that. But anyway, so just something to really think about. These 2 points here are just so important. What should the price action look like? When it doesn't, make the decision really quickly. And then just stick with your decision. I suppose like either way you do, it's fine, just as long as you're like consistent in doing something that works with your edge. Anyway, so that's it for today. I will be back with next week with another one. Have a great week trading, everybody, and I will see you next week. Bye.